Happy Monday once again, everyone. Bryan Devore, Devore Realty Group, Berkshire Hathaway Home Services, California Properties with another Monday market moment. Well, how does an extra $141,000 sound? Well, sounds pretty good to me. How do you get that? Well, we'll get to that in just a moment. First, let's look at the latest stats. Right now, we have 5,516 homes for sale throughout San Diego County. It's an increase of 81 from last week, with a median list price of $972,000, lower than it was the week before, with an average days on market of 47. Pending sales actually went down last month. Total pending sales went down last month. 2,301, down 63 from last week, rather. Median list price $899,000, higher than the week before. Average days on market 29. Months of inventory went down to 2.75. That's a welcome sign for those who are thinking about selling their home. Kind of nice to see why that happened. We'll get into that shortly. How many homes came on the market last week? We saw 827 come on the market last week. It's a big drop of 131 versus the week prior. Why did so many fewer homes come on the market? Maybe people were gone for spring break. Who knows? Median list price of $950,000. New pendings 386, 14 more than last week. So there are fewer homes pending now total than it was a week ago, but more homes went pending last week than the week before. I guess that means a bunch of them closed escrow. We'll find out shortly. Median list price $912,449. Average days on market 24. New pendings listed within the last week 15, and within the last 2 weeks 152. So 4% of homes sold in a week or less. 39% sold in 2 weeks or less. How many homes closed escrow last week? Do we see a big jump? We did. 424 closed escrow last week, 83 more, 20% more than the week prior. So a lot of homes went pending, but not as many homes went into pending status as actually closed escrow. Median list price $898,000 and a median sales price of $897,500, just under the median list price. Average days on market 25. Least expensive sale was in Julian. Yep, $50,000. You can get a home, manufactured home in Julian for $50,000. Or if you have a little bit more money, you can go to La Jolla, $13,863,000. That was the most expensive sale last week. Here's a chart showing new actives, new pendings, and new closed sales. The big drop in new actives, the fewest new actives in quite a while. New pendings were about the same as it was the week before, which was higher than the week before that, and a big jump in the number of closed sales, which is why we saw months of inventory go down. Here's a chart showing median list price and median sales price, roughly the same as what it was a week before. Okay, Stephen Thomas came out with his reports on housing. Here's how inventory looks right now, the red line, and you can see where we are relative to years past, where we are now above the inventory that we have had at any point, not just this time of year, but any point in the last few years. We're not yet at where we were before COVID, but you can see the trajectory is higher than the green line. Will we pass the total inventory that we had before COVID hit? Didn't seem like that was going to be possible given all these gaps right here, but it's getting closer, isn't it? We'll have to watch and see. Meanwhile, the demand, number of homes that went pending in the last 30 days, going down, not with the direction we're hoping it will go. We were above the purple and blue lines. Now we are back at the blue line, still above the purple line there, but well below where we were in 2022 and well below where we were before COVID as well. Interest rates went down a little bit. They're back up again. That's staying stubborn, unfortunately. Here's expected market time. It's a new chart that he has. You can see our expected market time because we have so much more supply and such less demand. The expected market time is quite high. The expected number of days it will take to sell a home right now is well above where it's been in quite a long time, even well before COVID as well. Okay. San Diego County sales for March of 2025. This is why pricing your home correctly right the first time is so critical. Stephen broke out the total number of sales in the month of March. And he separated them out into three categories: those that had no price reduction, those that had a reduction of 1 to 4%, and those that had a reduction of 5% or more. So 77% of the homes that closed escrow in the month of March had no price reduction. So that's great. The sales to the last list price ratio, 99.6%, and the sales to original list price ratio, well, it's the same because they didn't change their price, 99.6%, and the median days on market, 12. That's where you want to be. Priced your home right, you'll get it sold very close to list price, just 0.4% under, and you'll sell it in less than 2 weeks. Well, what happens if you have to reduce your price by 1 to 4%? 12% of the homes were in that category. The sales to last list price ratio, 97.6%, so 2% less than the ones with no reduction, but an even bigger drop from sales to original list price, 95%. And that takes 45 days. So your home's going to be in the market for about a month and a half. If you have to reduce your price by 5% or more, 11% of the homes were in that category. Sales to last list price ratio, 96%, so 4% less than if you had no reduction at all. But you're at 87.2% of the original list price, and you'll take over 2 months to sell. All right, let's look at some real numbers to see what all this stuff means. All right, so to put it in perspective, say you have a home that's originally listed for $1 million. And if you don't have to do a reduction, you're in that 77% that don't have to reduce their price. Say it sells for $996,000, then you get $996,000. Not a huge drop. Say you have a home price at $1,027,000, and then you have to reduce it 1 to 4%, so say to $1 million. So we're using that $1 million level. So you start out higher to get to $1 million. You actually wind up selling it for $976,000. That's 20,000 less than if you didn't have to reduce it to begin with. If you started at a million instead of 1,027,000, you sold it and you would have made an extra $20,000 there. But it's $57,000 less than your original list price. So it's 20,000 less than if you didn't reduce your price at all, but 57,000 less than your original list price. You started too high. All right, let's dive a little bit even deeper. What if your home was priced at $1,101,000? Well, if you reduce your price by 5% or more, that's at your $1 million level. So you sell it for $960,000. It's 36,000 less than with no reduction, but it's $141,000 less than your original list price. So if you price your home 5% too high, you're costing yourself a ton of money. So how can you make an extra $141,000? It's pretty simple. Price your home right the first time. I tell this to all my clients. Do you want to be in that 3 to 4% who sell it in a week or less? Or do you want to be in that other percentage that's going to take a lot longer to sell and you're going to make a lot less money? What is the right price? Well, that's why you need a professional to help you decide that. But definitely listen to whoever you work with and price your home right the first time, especially in this market right now, where it definitely seems to be a little bit slower than most springs. That's it for this week's Monday Market Moment. Don't forget to scan the QR code to track your home's value. If you have any questions, feel free to give me a call, send me a text or an email. I'd be glad to help. And I look forward to seeing you next Monday, the next Monday Market Moment. Have a great day.